And talking about kind of the financial commitment of a home, what are kind of the three most important things you think people have to realize about that financial side of buying a home actually?
Yeah, I would say the first and most important is that when you're renting, your rent payment, that is the maximum payment. You're not going to have any additional expenses. Typically, it's not really, I mean, the rent might increase, but you're not going to have repairs, renovations, property taxes that might increase, homeowners insurance that might increase. And so rent's the maximum payment. And then your mortgage payment, that initial mortgage payment, that's the minimum, right? It can go up, like with property taxes, homeowners insurance, and escrow, that can go up. You can have more expenses, repairs, renovations. And so that's, I would say, the first and most important thing to think about when making that financial commitment. Second, I would say, it's a big commitment to yourself and your family, if applicable, if you do have a family, and just make sure that you're protecting against the risks and planning like risks that, can get in the way of continuing to be financially secure and continuing to be able to make that mortgage payment, like potentially not being able to work. Once again, repairs and renovations, job loss, etc. And so just make sure that you're planning for that so that you continue to uphold that commitment of staying in the house to yourself and your family. And then third, I would say you're going to find this one interesting because I'm a financial advisor. But I would say like when people are purchasing a home, they should realize that buying a house may not always be the best financial decision at the time. And I'm a firm believer that owning a home or owning property, whether it's a primary home or an investment property, it's an important part of long-term wealth building. But when making a financial commitment as large as that, I don't think it should necessarily only be about the financial aspect. It transparently may not build you the most wealth in the short term, potentially not in the long term, depending on how real estate goes and where you're buying, and et cetera. But it should have a personal, emotional side to that decision as well. Because like, is it your dream home? Is it a better living situation for your family, a better school district for your kids? Whatever it may be, but without any other reason than wealth building, I think that maybe you should run the numbers on if that will build you the most wealth long term versus maybe doing something else. So I think that that's kind of important as well in making that commitment.
Yeah, that third point's actually really interesting and a really good point because for some people, they're not in a position to necessarily buy a home, whether they might have the financials in place to get into the home, but then after that, they don't have the financials to keep up the home.
Hmm.
Or like you're pointing out, they might be renting in an area that has great schools. They have kids, they have great school district, but they can't then afford a home in that area. So is it best for them to move at that time and try to buy a home? Probably not. So yeah, that's some great points right there as you bring up.
Yep. I'm glad that you agree.
Yeah. And then, yeah, I don't want to ever force someone to buy a home when it's clearly not in their best interest. And that's something I'll talk with my clients about. Is it the right time for you to buy? That's what I always say. The right time for someone to buy is when they're ready to buy. It's not
Hmm.
about any other kind of outside circumstances. Like interest rates, always a huge talking point. It's just when the client is ready to buy, when they're set, when they're financially set, and then when they're kind of mentally set, because it is a big mental jump going from renting to buying.
Totally.